Hey everybody, it's Terry. Welcome back to Tim Travels. So I'm here in the capital of the independent republic of the Panhandle, Amarillo, or as I like to say, Amarillo. So I see one of my fellow patriots over here. I'm gonna go over here and show off he's proudly flying his colors. I want you to check this out. Doesn't make you want to stand up and sing the national anthem. I don't know what does. Man, that's patriotism right there. Got his come and take it bumper sticker. Run over some car parts here. Yeah, this is America right here. Got the flag, America's first flag. I like how he reps the colors, man. I like how he reps the colors. Stand for the flag. Kneel for the cross. So sometimes it's good to be lucky. And so last night got over here to Amarillo and I had checked the fuel prices, and all the way from like Albuquerque over here, the best fuel price was at the Pilot or the Flying J here in Amarillo. It was $4.05. But when I pulled in, I parked. And I was like, well, I'm gonna be here a little while, so if I need to get fuel, I'll just, I'll check my messages and then I'll pull back around to the pumps because there's plenty of parking space. So then I saw another note from our crack fuel desk team. Said, oh, prices are going down again. So woke up this morning, price had dropped 8 cents a gallon, just like they said. So I just fueled, and at $3.97 a gallon. So not too shabby, plus whatever my fuel surcharge is. So it's a good way to make a profit. But we'll talk about that fuel stuff here in a second. So as I mentioned, we're down here in Texas, and Texas is important for some reasons. One of them is Texas is by far the state that produces the most crude oil in the country. Now, part of that, a lot of that is probably given to its size. North Dakota runs like a distant second. Like North Dakota produces maybe about a quarter of what Texas produces. But anyway, 20 to 25% of what Texas produces. So, a lot of truck drivers are panicked about fuel prices. And I saw an article yesterday on Yahoo where they had interviewed some independent trucker, a guy that does heavy haul, and he was saying, there's going to be a lot of bankruptcies. Like that was kind of the subtitle of the article, the idea that there were going to be a lot of bankruptcies amongst owner-operators, small companies, etc., because they can't manage the spike in fuel prices. But here's the interesting thing, right? Like I'm seeing prices have spiked, but they've also spiked in both directions. And a lot of success in managing fuel costs is knowing what fuel pricing is on a day-to-day basis. And I don't think a lot of I know a lot of big companies keep very close track of what fuel prices are, right? Because if you got 100, 1,000, 10,000 trucks on the road, knowing what fuel prices are in any given at any given time and in any given place is gonna impact your bottom line. It's got to, right? But there are a lot of people who haven't altered their behavior and have, they haven't really changed their habits at all to, kind of mitigate their costs, their variable costs. They haven't done anything to affect the market for themselves. And as an example, like people are going to say, oh, I got to have diesel fuel to drive. That's true. But maybe you don't need to drive 78 miles an hour. Or maybe you could pay closer attention to your tire pressure. I mean, we know how to save fuel, right? It's not a mystery. And if you think that argument is not worth any merit or doesn't have any merit, ask yourself this. Supposing for a moment, everybody knows I drink Diet Coke. Well, supposing for a moment that instead of being like at the truck stops, a 12-pack is around like $7, I think now, a 12-pack of Diet Coke, right? But supposing for a moment that 12-pack went up to, I don't know, $16, would that alter my behavior? Well, it might. If I was like, hey, if my wife was like, hey, you're spending, 3 times or twice as much on Diet Coke as you used to. It's like anything else, right? We have to base our behavior on, our ability to pay, the cost, etc. And so and people's behavior will change, right? So that's part of it. But let me tell you another way to ameliorate some of the damage from these costs, these spikes in diesel fuel or gas for that matter. Everybody, lots of people drive, so it's not just that. So I'm going to tell you something I did back in 2007, 2008. I, like anybody else, I was like sensitive to fuel prices, right? I didn't drive a semi, but I had a pickup truck, and fuel prices started really going up. And back then, I can remember diesel prices, just like the local 7-Eleven being over $5 a gallon, and gas prices being over $5 a gallon in a lot of places. So I was like, I can't do it. I can't really drive less. And candidly, I'm not sure if I slowed down a lot in my pickup truck. But what I did do is I invested in the industry that was raising prices. I invested in the industry that was costing more money to me. In other words, I tried to make money from the fact that they were making more money because of fuel price increases. So that's what I'm coming, and I'll tell you exactly who I invested in back then. ExxonMobil. Their ticker symbol is XOM, and I actually went back and looked at some old statements. Now I eventually sold that stock because fuel prices started to moderate, and I probably just needed the cash. But I certainly made money on that stock. And here's some criteria that I have, and I've talked to a few friends about this. These are some criteria that I have for buying stocks. First of all, I always buy stocks that pay a dividend, okay? That's the first criteria. The second criteria is I don't buy stocks in any company that has ever cut their dividend, right? The other criteria that I use, one of them is called beta, and that beta is a measurement of volatility. I don't want stocks that are super volatile. So any beta, a completely level beta, in other words, a stock that moves exactly the way the overall market moves, the beta is going to be 1.00. So I'm looking for, I look for stocks that are between like a 0.8 beta and maybe like a 1.2, in that range. So they might be a little more volatile than the overall market, but they're not going to be prone to huge swings either way. That's another criteria. And and always large cap. And you can look up the definition of large cap. I like companies that are established and that are dividend payers. And and in this sector, if you want to make up for the fact that maybe your bottom line is profit is your profit is down a little bit on what you're hauling and how you're hauling it, think about investing in the industry that is making more money now than they have been than they were a year ago. In other words, invest in the people that are selling you stuff. Because if they're selling you stuff, they're selling everybody else stuff. Now, that means you get a little tiny rebate, in a way, on what you're buying. But you get a lot more on what everybody else is buying. In other words, cash in on people. The guy driving by you, you're driving your semi at 65, he drives by you at 80, he's putting money in your pocket because he won't slow down. And let me share with you a few companies that I think, and I'm not selling stocks, I'm not stock prognosticator, but I will say this, and we could talk about this in other contexts. My friend Lyle knows the real estate industry really well, and he's often talked about truckers buying houses. And I certainly own houses and, have some rental properties through some companies. But, that's not the only way to make money. Now, if you need a place to live, well, yeah, buy a house, right? You gotta have a roof over your head. But if you're just out here, maybe living in your truck almost, and you got a lot of extra cash, investing some of it can be a really great way to build up a portfolio and, have some gains and, maybe make a little extra money off of this fuel crisis, if you want to call it that. So here are some stocks, and I'm going to give the ticker symbols, okay? And I'll say the names of the companies too. But these are some companies that you can make money off of because of how the market is right now. And I'm going to also tell you what their dividend yields are. Now keep in mind, what would you get if, even though interest rates are going up, what would you get if you put money in a savings account right now? Maybe 1.8%, maybe 2% if you threw some money in some CDs. So say 200 basis points. Let's just talk about what the yields are on these stocks. And keep in mind, the dividend yield is not tied to the gains in the stock market. However, and let me explain the dividend yield a little bit. If a stock is at $40 and their dividend yield is 2%, right? If the stock goes to $50, unless the company raises the dividend, because the dividend is paid on a fixed amount per share. So unless the company raises their dividend because their stock went up by 25%, then that dividend yield is now less than 2%. Doing the math, I think it would end up being, 1.8%. If Tom was here, he could tell me because he's the numbers guy. But so the yield would drop. But if the yield drops as the stock price goes up, that's an opportunity to just sell. If you want a higher yield, sell and maybe move that cash to another stock that pays a higher dividend. So don't confuse dividend yield, right? And we'll call it the interest rate, but it's really not. With the growth of the stock, the daily stock price, okay? But you want to look at stocks that have a good track record in bad times. And right now, if you consider this a bad time because of inflation, fuel prices, these are stocks to own because they're not going anywhere. And I don't even care if the world goes into a recession, right? Oil demand can drop, but that's not going to necessarily mean you're not going to make money on these stocks, because if the stock price drops, that means the dividend yield is higher, okay? And if you use your dividends to buy more stock, then you're using the dollar you get from dividend yield on a quarterly basis, and I'm saying dollar as a placeholder. That dollar buys more stock. So if you hold for the long term, you'll have way more shares than you ever paid cash for because of the dividends, okay? So here's some stocks I like. Now, full disclosure, I own none of these, but I do like them. And I'll maybe do another show where I talk about stocks I do own. Now, and let me preface this by saying I also have 401k money that maybe I'd have to look at the funds that I'm in. Maybe in these, I may own some of these through a mutual fund, which is in my 401k, but I don't directly own any of these. And one more point about these before I talk about them. Some of these stocks you can buy directly on the internet. You don't even have to go through a broker. You could go to a site like ComputerShare and you can buy these equities, okay? So the first one I like, come on in, I'm talking stocks. So I mentioned ExxonMobil, ticker symbol is XOM. Right now, their dividend is 4.2%. That's their dividend yield. But I could tell you in the past month, their share price is up substantially. I don't want to go into the numbers because the markets are open right now. Another one I like, another American company, Chevron. Chevron, their dividend yield's 3.43. That's actually, that's lower than ExxonMobil's, but it's probably because Chevron's share price has performed better than ExxonMobil's over the past, quarter. Now here's an interesting company. They're based in Houston, but they're actually an LNG, liquid natural gas play. If you want to just be a little diversified in the energy sector, it's Cheniere Energy Partners, and their ticker symbol is CQP. Their dividend yield is 5.03% right now. Okay, but let's get back into the people that are like making gas and diesel. Okay, another one I like. This is a foreign company. It's Total Energy, right? And you probably, if you follow Formula One racing. And by the way, in 2023, they're going to have a night like dark. It's dark out. Formula One race in Vegas. So if you like auto racing at all, or you like Formula One, you like the that's going to be cool. Night Formula One in Vegas. That's going to be cool. So if you ever heard of the team Total Fina Elf, anyway, Total Energy, right? 5.87% yield. These guys are a huge player around the globe. 5.87%. But wait, now how much would you pay? Well, it gets better. Petro China. I don't like the Chinese. If you can't beat them, join them. I'm not saying that really. But you can make money off of what they're doing. You can make money off of what they're doing. Take their money. Petro China, ticker symbol PTR. Right now, 6.35% yield. Dividend yield. 6.35% dividend yield. If you took 6.35 and compound that out, like 5 years, do you really think Petro China is not going to be around in 5 years? Just do the math, right? You'd be like, I don't give a shit how much diesel costs. $8 a gallon, put it in. Because I'm collecting 6.35% on all the stock that I buy at Petro China. But wait, it gets even better. Yeah, that's right. Another Chinese play, China Petro and Chemical, ticker symbol SNP. Hold on to your hat. Dividend yield 8.88% right now. 8.88%. That's without, that's a huge dividend yield if you want to make a play there, right? That's how you can hedge, right? Because you don't have a hedging strategy, right? Like how big companies like airlines, railroads do it. They buy fuel futures. They buy petroleum futures to guarantee pricing, right? They pay money to lock in a price. You can't really do that. I can't really do that. I don't know if Prime can even do that, right? They do have agreements, but they have agreements with retailers, not suppliers. Because you know, Prime doesn't have the. I don't know. Maybe they do, but I don't think we use enough fuel to really qualify for that. I mean, just to give you an idea, one diesel locomotive, the tank on a diesel locomotive, I think, is around 1,500 gallons. So when, you know, BNSF or UP fuel the train, that's a lot of fuel, okay? And they have big facilities with storage tanks. I'm sure that it's piped right in. I mean, I can't imagine that it's, I mean, I guess it could come on trains, but it's big. So we don't have hedging strategies, but we could still make money off of our own pain. And I think that's kind of cool. So anyway, just something to think about, right? Just something to think about while I'm here in the biggest oil producing state in America. So anyway, stay tuned, more to come, and yeah, stay safe. Bye.